What is going on, guys? So today I'm going to be talking about why major banks are choosing to use ISO20022 cryptos, and why banks are like JP Morgan are telling people to get ready for this new era of technology, almost if they're launching something or they're going live in a couple weeks from now. I don't know. But anyways, so where does Hedera Hashgraph fit into this category? Well, I'm going to shed some light on why I personally believe that not only XRP, Quant, XLM, XDC are going to be at the top. I think that HBAR is going to shine and a little bit better than the rest, and I'm going to explain that in this video. Guys, my channel is dedicated to bringing you knowledge and experience by simplifying fundamentals of cryptocurrency. I know cryptocurrency can be challenging at times, but without having any information or without having any knowledge brought to your attention, it's a struggle. So my mission is to serve and provide you with all the tools such as research, strategies, identifying potential projects, and find certainty of your investment portfolio being successful. Lastly, I will help you build a portfolio that can generate profits while applying risk management. So if you guys are ready and you guys really enjoy attributes like that, where you could be successful in crypto, whether you want to be an entrepreneur or you want to be simply a crypto investor, make sure you smash that like button. Make sure you guys subscribe for a better future. Turn on those bell notifications. Watch all the way through, because every video that I put out, I have now committed to putting a little bit of knowledge of crypto investment fundamentals, strategies, jargon, like what DCA is, what tokenomics are. I've committed to drop a lot of information in these videos just to give you some insight on what those wording truly mean. So let's get into it, guys. HBAR, Hedera Hashgraph, why am I super bullish on this project? So guys, just bear with me as I go through this video. You guys might see me reach up. I got tons of notes. It's kind of hard to run a whole video without having notes, so be mindful of that, guys. All right, anyway, so let's get into it, right? So HBAR, Hedera Hashgraph. So this has a potential, this project has a potential to play a huge role in the banking and financial industry for several reasons, right? So Hedera Hashgraph is essentially built on a distributed ledger using distributed ledger technology. This can provide a more efficient and secure way of recording and verifying financial transactions. This is particularly useful in banks in reducing fraud, reducing error, reducing costs associated with traditional systems. Hedera's network also can enable faster and more cost-effective cross-border payments. Banks can use HBAR to simply build applications on the HBAR network to facilitate any international money transfers, so potentially reducing the time and fees associated with these transactions. And generally, I think that's what XRP was looking for, was to cut out all these 7-day waiting periods, all this 24-hour verification before the 7-day verification, saying okay, it's fine to wire the money over when it should be instant. And so that's what HBAR's done, that's what XRP's done, that's what Quant has done. Essentially all decentralized cryptocurrency blockchains have built this into their system to avoid having to wait on human verification processes. So Hedera also supports smart contracts, which are self-executing. So they're self-executing contracts with the terms of the agreement directly written in code. Banks can use that smart contract to automate various financial processes such as loans, approval for loans, transfers, or anything behind any banking utility functions that go through banks. Okay, so Hedera Hashgraph can be used to create a secure, tamper-proof identity verification system. Banks can leverage this technology to enhance customer onboarding processes and also help them prevent identity theft and fraud, which many of us have been dealing with for a very long time. I mean, me personally, I've had maybe 6 or 7 cases where there's been some fraudulent activity on my banking card, because either somebody took the information from a credit machine, or something, there may have been a business that I interacted with that kept my information. So I could say right off the bat, I had 3 incidents where there was actually money withdrawn from my account from a transfer or anything like that. So decentralization and blockchain technology eliminates the risk of that having to happen. Also, Hedera enables the creation of digital tokens, right? So, which this can represent various assets, right? From traditional currencies to real estate, stocks, bonds. Banks can essentially tokenize assets to make them more liquid and accessible for trading. Hedera can also be used to create transparent supply chain solutions, make it easier for banks to provide financing to businesses, based on their supply chain or data transactions, etc. So with Hedera building this, if you actually look at Quant, you look at XRP, you look at XLM, essentially these cryptocurrencies, and they're all ISO20022, and I think this is the ticket behind why these cryptocurrencies are attached to the ISO20022. They all have the blockchains, they all have the quick easy payment, the transaction verification, instant cross-border payments. They all have these attributes that make it relevant to the banking system. So what I think that is good for Hedera is that their network actually offers like high levels of security and transparency. Banks use that to securely record, verify sensitive financial data and transactions, reducing the risk of data breaches or any manipulation inside the banking system or in other cases. I mean, I don't want to get into specifics behind that, but it could eliminate any tampering with your money associated with these cryptocurrencies. So since we're talking about finance, let's chat about tokenomics. So this is one of those nuggets that I'm going to put in the video. So I'm going to give you guys some information behind cryptocurrency terms. So tokenomics, how is that important? Like when it comes to cryptocurrency or anything, like where does it fall? Where does tokenomics fall? Well, generally what I like to do is understand that tokenomics are important because of certain reasons, right? And the reasons are essentially that tokenomics help you assess the project's value proposition. So you need to know why the tokens exist, what problem it aims to solve, and how it fits into the project's ecosystem. So the tokenomics actually provide insight into the token supply and distribution. Scarcity can drive demand and potentially lead to price appreciation. If there's an excessive inflation or large supply, it could actually dilute the value of the token. So when you look at tokenomics outlines the utility of the token within the project. Tokens can actually serve various purposes, right? From governance to access to services or products, evaluating the usefulness of the token for crucial assessment of the project. Tokenomics often involve mechanisms for governance and incentives. It's important to understand how decisions are made in the project and how that can actually be changed by how the incentives are structured and to encourage participation and contribution. So the tokens are initially distributed, and whether they're vesting periods for team members or early investors, this could significantly impact the project's credibility as far as long-term goes, long-term success, because you'll have them people trying to cash out all their tokens all at once. And, you know, if you have a nice percentage of tokens allocated to developers or team members, and, you know, say this project hits a good price and they start dumping all their tokens out, it's going to obviously impact the price of the cryptocurrency at the time. So understanding the tokenomics part of it is very, very important. You know, cryptocurrency projects have various economic models. Like some have proof of work, some have proof of stake, others have delegated proof of stake. These modules essentially influence how tokens are created and secure and validated. Some projects actually incorporate mechanisms to reduce token supply over time, which is called a token burn. And to keep you guys familiarized with major token burns that we've seen Shiba Inu be a good example of token burn asset, right? We've seen all these videos that were put out that were burning Shiba Inu tokens, going to their burger joint, you were able to burn tokens. There was a lot of burning mechanisms in there for Shiba Inu, and other projects actually have burned major cryptocurrencies over time, like Terra Luna. I know they're developing some type of very consistent burning mechanism. So also, you know, understanding the burning mechanism, which is like reducing the token supply. They use revenues to buy back tokens from the market. So these could also affect the token scarcity and value when cryptocurrency projects offer buybacks. So tokenomics also includes provisions for community development, partnerships, incentives, and ecosystem growth. A vibrant community and thriving ecosystem can basically contribute to a token's long-term success. So understanding tokenomics allows you to basically assess the project, its potential risks, including regulatory concerns, vulnerabilities, potential for market manipulation, many other things that could also drive the price that relate to tokenomics. They could also provide insight into the project's long-term viability. You know, projects with well thought out tokenomics are more likely to withstand like the volatility of the crypto market and also regulatory changes. To summarize it, I think that tokenomics are critical because they provide a comprehensive view of cryptocurrency projects, economic governance, structure. Evaluating tokenomics is basically doing your due diligence to know basically should you be in this project or not. It's very critical to make sure you understand tokenomics. So if you guys have any actual questions about tokenomics and the material I just went through, just make sure you guys drop that in the comments, and I'll provide a quick, swift answer for anything related to the tokenomics part of this video. So I wanted to give you guys that. So, you know, it's very good to understand the wording, the you know, at least what it takes to actually get in there and invest in crypto. So I don't want you guys to miss out on this crypto revolution. Obviously, if you're serious about taking control of your financial future, hit that subscribe button and do it now. Do it with some conviction, because my channel is your ultimate guide to mastering cryptocurrency. So you can seize every opportunity and build wealth. Smash that like button, turn on those notifications. Let's conquer the world of crypto together. Time is of the essence. We're on a bull run. We got a bull run coming, guys. So it's critical that you act now. Subscribe to Run My Crypto community for knowledge and strategies that essentially could change your life forever. I hope you guys got some value out of this. I really want to bring in a big community and give as much as I can to you guys. Again, I apologize. I threw a bunch of notes together, so I'm kind of going in and out, and you know, but I want to make sure that I give you guys the exact information that you need as correctly as possible. You know, it's hard to memorize a lot of information and put it out there. All right, guys, if you guys have any questions, just drop them in the comments. Again, I hope you guys got something out of this. Make sure that you guys are doing the best that you can to invest correctly. Again, thank you for your time. Thank you guys for watching Run My Crypto. Appreciate you guys. Take care. Be blessed. And remember, this is not financial advice. Got to say that. Got to throw it in, guys. But nothing but love for my community. Take care. Be blessed.